All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is September 25th, 2025, and we are talking about my favorite topic in the whole world today. I love it. My favorite of the shiny silver touched $45 overnight as the silver squeeze continues, and I think we can describe this as a silver squeeze. It's not the silver squeeze that we all wanted in 2021, but sometimes the squeeze you get is not the one you were expecting. And that's what we have right now. Now, silver's pulling back a little bit over the last few minutes. We were up $1 and change. The last I looked, we were up about 70 cents. So things are moving now. We have since come back down under $45. But there's a couple of things happened recently. First of all, I got to send a shout out to my friend Bob Coleman, who came on the channel late last week or mid last week. Nailed the call once again. Bob has been on fire these last couple of years. He had mentioned that the borrowing cost for the SLV ETF was going up so much, indicating a shortage of shares, over levered positions. He thought it looked like people were going to start or it looked like they were going to issue a bunch of shares. And, well, that happened. The SLV issued shares representing about 5.2 million ounces of silver yesterday. That is new demand for silver. That is even more of a paper shortage for silver. So that is contributing to the rise in prices here. Also, this mine in Indonesia. There was a story broke yesterday. It didn't get a lot of attention in the press. It was mentioned in a couple of outlets. But the Grasberg mine in Indonesia, there was a big collapse in this mine. Basically, it looks like a landslide if you look at the aerial photographs. Unfortunately, at least 2 people were killed. But this mine produces 3% of the world's copper every year, 1.2 million ounces of gold a year, and 6 million ounces of silver a year, which is a little less than 1% of gold and silver. And this mine looks like it's going to be shut down for months, probably not until the latter part of the first half of next year is when this mine will start operating again. So maybe even a little bit of worries of a physical shortage of the metal. Remember, price is determined at the margin, right? It's the last ounce that's sold that dictates what the price is. And so if one of the biggest mines in the world is shutting down, by the way, that's not the only one. There was also a large mine in Peru shut down just a few days ago. So these issues are affecting production, ultimately leading to higher prices for silver. Copper also ripped yesterday. It was up several percent. It's also coming down off its highs here. But the metals are doing great this morning once again. And I just love to be talking about this, guys. Now, here's the thing. Keep in mind, guys, gold and silver going up in a straight line might be good for your stack. It might be good for some of your positions in miners. I know we have a lot of guys own mining stocks in this channel. But I'm not sure I want to live in a world of $10,000 gold. Actually, let me rephrase that. I know I don't want to live in a world of $10,000 gold. Even though I own gold and that's very good for me, that means everything else has gone to shit. And the fact that gold and silver keep going up in practically a straight line should be worrying people. And it's not. Everybody's just like, oh, my AI stocks. Sam Altman said he's going to sign a gajillion-dollar deal. And so YOLO and the zero DTE options. Meanwhile, gold just keeps grinding higher and higher. Guys, that is the smoke alarm going off. Gold going up in a straight line. It's not good. I like to see it for my own selfish reasons, but understand what it means. And once again, I got to requote Mish. I mentioned this a couple days ago, what he said the other day on our phone call. He said, retail is all in, and everybody who knows what that means is running to gold. Today is no exception. Also going on today, guys, we got a lot of data, and this is something I've warned about on the channel for years. I've talked about how important our government data points are, that this economic data is. This is the instrumentation, the speedometer, the tachometer, the temperature gauge for the economic engine of our economy, and our instrumentation has problems. I'm not going to say it's not working. Maybe we'll stop short of saying it's not working and it's outright broken, although in some cases it is. But case in point, we got this second quarter GDP. The final revision came out. Now, the initial estimates for the second quarter GDP was that it had grown by 3.3%. A lot of people were saying this is quarter over quarter, right? In the first quarter, everybody was front running tariffs. And so, that surge of inventory took GDP negative. And then we had a big 3.3% growth. And of course, like all the liberals were like, well, if you average the 2 quarters, we're down. We're down for the first 6 months, or the slowest economic growth in 6 months, ignoring the good number by diluting it with the bad number. It's a little dishonest, even if it isn't factually incorrect. But all of a sudden now, 3.8% for the second quarter GDP. They rose it by 0.5%. All right, 0.5% of GDP, guys, that's a few $100 billion of economic activity that just poof, materialized out of thin air. Where did it come from? I don't get it. What changed? Now, they're saying it was a surge in consumer spending. And right away, I got to say, it doesn't really pass the sniff test. Everything I'm seeing, all the consumer-facing names are struggling. They're closing stores. They're laying off workers. They're reporting disappointing earnings. So where is all this consumer spending coming from? All right, is debt fueled? Credit card debt at all-time highs? Buy now, pay later debt? Maybe. Maybe you could partially explain this. We're talking about second quarter GDP, so that's April, May, June. Maybe some of the things we're seeing, like in CarMax earnings today, where there was some pull forward demand. A lot of people bought cars a few months ago ahead of the tariffs, and then the report comes out that now car sales are way down because everybody bought their car before the tariffs hit. Maybe that skewed the GDP number a little higher. Maybe that partially explains this 3.8% number. But when the initial estimate is off by so much, you have to wonder, where is it coming from, especially with all the moving of personnel around the economic data points recently, the firing of the BLS chief. And look, she sucked at her job. The BLS has been doing a terrible job with 911,000 jobs just magically disappearing overnight. But that's another thing. Where does 0.5% of GDP growth come from at the same time 1 million jobs disappeared? All right, there's all this economic activity being generated by unemployed people? Well, that's what they're telling us. Come on, guys. Come on now. We got a lot of other shady things going on with the data today. New home sales were reported yesterday, up 20% for the month of August. I'll take things that definitely didn't happen for 1,000, Alex. There is no way new home sales increased by 20% in a month. That doesn't happen. Maybe they went up a few percent, but 20%? Something's wrong with the data. What else we got? Stephen Moran is out talking about how he expects shelter inflation to come down in the next few months. Put a pin in that. We talked about shelter inflation a few days ago. We talked about a delayed report over at the Bureau of Labor Statistics. I think I see what they're doing. We're going to talk about that one again today, too. I think I know what they're doing. It's a little dishonest. We also got initial jobless claims, a steep drop this morning. Keep in mind, 2 weeks ago, we got a big spike in initial jobless claims. It turned out that was all unemployment fraud stemming from the floods in Texas. So there's another economic data point that's been all over the place with errors recently. Continuing claims came down a little bit, but you know what? Last week we had a big mistake in continuing claims when North Carolina, for some reason, reported almost no continuing claims. All of a sudden, all the unemployed people in North Carolina found work? No, of course not. The instrumentation is not working right. Somebody tapped the gauge. The thing ain't working. Guys, this is too important. We need to know, and I have to say it, beware the infectious stink of politics in economic reporting. That will cause big problems. We've also got the government shutdown. This looks like it's increasingly likely next week. That's fun. And, it's bless me, Father, for I've sinned. It's been 6 months since my last government shutdown. Now, here's difference. Here's the difference this time around. The Trump administration is telling government agencies to get ready to fire people during the shutdown. Not just furlough, not temporary layoffs, and then give them their back pay. And it ends up costing the government more money than if they had just kept it open the whole time. No, they're talking about using the shutdown as justification to fire people. That's a new flavor here. The political stuff over the next few days, it's going to get even worse, guys. So just beware that's coming. We've got Intel was seeking a cash investment from Apple yesterday. I don't know what that's all about. Is Intel just, lip boutans calling up Tim Cook and saying something like it buys the Intel shares or it gets the tariff hose again? Is that what's going on there? You want to kiss the ring by buying some Intel shares? Maybe that's what's happening here. But either way, Intel needs help, guys. That foundry pretty much needs to happen. All right. The government took a stake in Intel. SoftBank took a stake in Intel. Nvidia took a stake in Intel. Now they're pushing it on Apple. Hey, is there some kind of policy decision you need out of Washington? Buy some Intel. We'll get you that meeting, apparently. We talked about CarMax earnings. Look, big dip in sales for CarMax. It looks like it was pull forward demand, and now we're on the back end of that, which means a big drop. CarMax stock getting crushed this morning. There was a report in The Information yesterday about this Nvidia OpenAI deal, and this is interesting. It turns out OpenAI is going to be leasing their chips from Nvidia, not buying their chips. And I have to ask, how TF do you lease something with a useful life of 2 to 3 years? Someone want to explain that to me? How do you lease it? What do you do at the end of that lease when the thing is freaking worthless? And how do you make the accounting work for that? I don't know, but they're getting more and more creative with the financing over there in the AI bubble. And by the way, I have to say a thank you to you guys, the melon heads. It's really surprised me over the last few days. Finally, more and more channels are out there covering this round tripping scheme that's going on with Nvidia and with the AI bubble. All right, what I've been saying for 2 years, everybody is now saying it. And in every one of these videos I read down in the comments, there is one of you guys saying nobody special finance had this story 2 years ago or has been on this for years. Let me just say how good it feels to see that in the comments on these much bigger channels who are finally saying what I've been saying. I really appreciate you guys that are out there doing that. Let me just say personally, right, when I started doing this, covering this, and when you see everybody in the financial press saying, ignore this guy on YouTube, he's an idiot, don't listen to what he's saying, that's a tough pill to swallow, and I've been taking shit from them for years. Now we're learning that I was right all along. So for the people who are pointing that out, I just want to say thank you very much. That is a very good feeling. You guys are freaking awesome. I love the melon heads. Also, China's digital yuan. They're opening their digital yuan hub and their push to de-dollarize and central bank digital currencies. That's fun. And as always, we have a warning about alternative assets and how Wall Street is looking at your 401k with a twinkle in their eye. This time we're talking about Blackstone and Apollo selling CLOs at breakneck pace. That is collateralized garbage coming to a 401k very near you. Stick around to the end of the show for that one, guys. Why don't we shrink my big melon of a head? We got a long show to get through this morning. And, well, hey, hit that like button. Hit that subscribe button. Go tell me, Kevin, I've been on this story for 2 years. All that good stuff for the algorithm. And, yeah, we do this one every day. Also, red coffee cup for those who were wondering. And look, the S&P 500 is down about 36 points, 0.5%, despite a gajillion dollars in round-trip deals for GPUs that may or may never actually get built. The S&P is down 37 points. The Dow is also down 118 points, or 0.25%. Looks like we're headed for the third day of a modestly paced sell-off in stocks. The NASDAQ leading the way lower, off 0.75%, or 187 points in the red ahead of the opening bell. Meanwhile, the DXY, I didn't get my chart ready. I am remiss. We've got a stronger dollar again this morning. Come on, Jack, get the chart right. There we go. We'll just leave it there. 98.14 on the Dixie. That's higher by 27 basis points this morning. That's going to put some downward pressure on asset prices. Looking over at the bond market, we got yields are going higher. Again, somebody forgot to tell interest rates that they're going lower because they keep going higher. The 30-year Treasury, 4.764. That's higher by 0.5 point. The 10-year, 4.177, up almost 3 points. The 2-year is up almost 5 points. And, the 2-year is at 3.647. And the 1-month, 4.097, up almost 1 point here. The big move appears to be the 3-year, up 5.5 points this morning. Interest rates going higher. We've got a rough day for crypto. Once again, Bitcoin is down around $111,500 as shown on Coinbase this morning. That's down almost $2,000 from yesterday. So what's going on with crypto here? We've got this one in Bloomberg. Crypto asset drop deepens ahead of $22 billion options expiry. We're not going to get too deep in the weeds on this one, guys. It looks like the sell-off is concentrated in Ethereum, much to the chagrin of Tom Lee. Ethereum, Solana are selling off. Bitcoin is participating this time. Apparently, there's a lot of leverage. A lot of people are getting liquidated ahead of this options expiration. Look, guys, been saying it for a while. I'll say it one more time. Be careful of leverage. We are now 74, almost 75 weeks from the Bitcoin halving, which means typically the Bitcoin crash would happen sometime around now. I'm not saying it's going to happen now, but the last two halving cycles, this is when it happened. And look around in crypto, WorldCoin treasury companies, shitcoin treasury companies rallying 3% in a day. We can see the fraud reaching a fever pitch. All right. We are repeating this FOMO cycle. We've got to be somewhere near the top. The crypto bros always get offended when I say that, but sorry, guys, then when it happens, everybody's like, how could they let this happen? Well, you try to warn people. They don't want to hear it. Looking over at commodities, the shinies are looking all right this morning. Silver's still bleeding out its gains, though. Right now, gold is positive, just barely up $4.27 at 37.40. Gold was up a lot more than that, so these gains are going away quickly here. Spot silver 44.54. That's up 64 cents or about 1.5%. It was up about $1.30 when I first looked this morning, but silver still rallying here. Overnight, we touched a high of 45.08, and we can see the front month silver contract went as high as 45.39 overnight for that December silver future contract. But you know what? I like the shiny. And guys, the question remains, what happens at 50? That's the big question. I mean, we're going to keep going up here. At silver, we're beyond the pale of technical analysis and everything. We're looking at a 45-year cup and handle chart with a lid around $49.50. What happens when we get there? Nobody knows. Everybody's going to try to tell you their opinion about what might happen. There's many things that could happen. It could go up. It could go down. It could stay the same. Did I cover all my bases there? Nobody freaking knows, but $50 is going to be freaking exciting. And it looks like we're going to be there in pretty short order. We've got copper is flat right now at 481, but put a pin in copper here because we're going to talk about that in that big mine collapse. Platinum, meanwhile, is up 2%. Palladium is up 2.1%. And WTI futures down 0.9% at $64.40 for November WTI futures. All right, we talked about silver real quick. We've got to talk about the gold to silver ratio because this red line here around 86 and change, that was the resistance or support line. The support line that Bob Coleman had called out in some of his tweets. And we talked about this on the interview that we did last week. And you can see we broke through that on Friday, the day after the interview aired. And we are continuing to move lower. The gold to silver ratio heading lower. Silver is outperforming gold in the short term after years and years of underperformance. Keep in mind, guys, gold is making a new high every freaking day here. Silver still hasn't taken out its high from 2011. Silver's got a long way to go to catch up gold here. The gold to silver ratio could keep heading lower. Historically, it lives around the 65 mark. Here we are in the 80s, even though silver's been outperforming since April. I think silver's going to continue to do so. Again, the question is what happens at 50? And we've got Bob Coleman. Got to give Bob another shout at Profits Plus ID. Guys, you should be following Bob on X. If you're not already, what are you waiting for? Bob has been on the money for a while here. And he was worrying last week during the interview. He kept saying the SLV, the cost to borrow, it's so high here. They're probably going to create a bunch of shares and buy a bunch of silver. And that is what they did yesterday. SLV ETF alert. The SLV ETF added 5.8 million shares. That's about 5.26 million ounces of silver to the fund yesterday. The big add has been consistent with recent option expirations. The options market is having a more dominant influence on many markets, including gold and silver. This is important here, guys. He's saying this is not manipulation. This is leverage. Now, maybe that's a little semantic, but I couldn't help but get a little bit worried. My spidey sense started to tingle a little bit when I see that this is leverage. Because remember, for every action, there's an equal and opposite reaction. For every leveraging, there is an equal and opposite deleveraging. So just be careful. That leverage building up in the system, if it's leverage on the short side, you could get a squeeze. If it's leverage on the long end, you could get a pretty rapid price correction. So again, what happens at 50? Just don't know. And in the original post, he was pointing out that the cost to borrow shares of SLV had hit $2.54%. That is historically very high. It typically costs about 0.5% to borrow those. Also contributing to the move in metals this morning, Freeport declares force majeure at the Grasberg mine and expects lower copper and gold sales. This one hit yesterday. Freeport-McMoRan on Wednesday declared force majeure at its Grasberg mine in Indonesia and said it is expecting consolidated sales to be lower for copper and gold in the third quarter, sending its shares down 10.4%. Earlier this month, the company had temporarily halted mining at Grasberg after a large flow of wet material blocked access to parts of its underground mine, restricting evacuation routes for 7 workers. Oh my God, talk about soft language by a company spokesperson. Can you look, when I show you the picture, you're going to, I don't want to say laugh because people died. It's not funny. But a large flow of wet material blocked access to parts of the underground mine, restricting evacuation. Yeah, the mine freaking collapsed from a landslide and people were trapped inside and killed. But they're like, oh, a flow of wet material. Let's see. The company said a phased report. Freeport last week located 2 members who had been fatally injured in the incident. In other words, they died. The company said a phased restart and ramp up of operations at Grasberg, one of the world's largest gold and copper mines, may occur in the first half of 2026. It might take them a half a year to get this thing back up and running, maybe longer. It also indicated that 2026 production at its Indonesian unit could potentially be about 35% lower than previous estimates. All right, guys, this is the Grasberg mine. This is the biggest copper mine in the world. You can see it from freaking space. This is obviously an aerial shot. Note the clouds for scale. And this whole area here, we zoom in a little bit. This whole gray area, this is the landslide. You know, this is the flow of wet material that restricted evacuation for some employees. I mean, look at how they soften the language here. This was catastrophic. It's going to take them a long time to excavate this stuff. There may still be people trapped in there alive. We don't know. They only got closure on 2 of the people. But this is the biggest mine in the world. Again, 1.2 million ounces of gold, 6 million ounces of silver a year, and 3% of global copper supply comes from just this one mine. There was also a big mine in Peru shut down last week. Freeport-McMoRan got clobbered yesterday, down almost 17% on that news, $37.67 for Freeport-McMoRan. Also, copper made a pretty big move on this trade yesterday. This green candle here, that was the big move in copper. You'll notice it's off its highs that we saw overnight here, trading at about 483 for copper futures. And also, you're probably looking at like, hey, man, what's this big giant red middle finger there in the copper chart? That was when we found out that copper ore was not going to be subject to tariffs, that it was going to be refined copper products. And of course, copper futures just took a dive on that one. That was back in July. Meanwhile, the White House tells agencies to prepare for job cuts in a shutdown. We're not going to get too deep into this one, guys. We'll probably be talking about this more next week. But the big thing here is they're talking about job cuts, not just temporary layoffs or furloughs, permanent job losses, which is different than prior shutdowns. Prior shutdowns, as soon as they end it, they bring the government workers back with back pay and interest. It usually costs the government money. This time they're talking about actually letting people go permanently here. That's a new dimension. And by the way, yesterday they were talking about laying people off at the OMB, the Office of Management of Budget. And it's kind of scary. I put this out on X. It's scary that it makes sense to lay off the people whose job it is to control the budget. That's freaking terrifying. But why have an office to manage a budget that you haven't had in 20 years? Nobody is serious about spending controls, so why even bother pretending? The scary thing is it actually makes sense to lay off the people whose job it is to control government spending. Oh, my God. It's so terrible. There's just not enough gold in the world, guys. Meanwhile, Intel is seeking an investment from Apple as part of its comeback bid. I guess Lip Bhutan's just calling up everybody in Silicon Valley now, shaking them down for cash, see if we can get them some favorable policy decisions. Intel has approached Apple about securing an investment in the ailing chip maker, according to people familiar with the matter, part of efforts to bolster a business that's now partially owned by the U.S. government. Apple and Intel have also discussed how to work more closely together, said the people who asked not to be identified because the deliberations are private. The talks have been early stage and may not lead to an agreement, the people said. Shares of Intel rose 4% in pre-market trading Thursday. Such a deal would follow a $5 billion investment last week by Nvidia, which plans to work with Intel on chips for personal computers and data centers. SoftBank, the Japanese tech giant seeking to expand further in the U.S., announced a $2 billion investment in Intel last month. And Intel has also reached out to other companies about possible investments and partnerships. A deal with Apple, a longtime Intel customer that switched to in-house processors in the past 5 years, would represent further validation of the chipmaker's turnaround bid. Still, it's unlikely that Apple would switch back to Intel processors in its devices. The iPhone maker's sophisticated chips are now produced by partner Taiwan Semiconductor. Intel rallied about 6.5% on that news yesterday. It's up another 1.5% this morning. Again, it buys the shares or it gets the tariff hose again. Meanwhile, CarMax drops as tariff-fueled pull-forward effect hurt comparable sales. This may partially explain the second quarter GDP number suddenly jumping by 0.5%. Emphasis maybe. But this is pretty big news here. CarMax shares plunged pre-market after the company reported a surprise drop in comparable sales as buyers had rushed to purchase vehicles in previous quarters ahead of a tariff on imported cars. The stock slid as much as 10% in pre-market trading Thursday. The used car retailer's shares had tumbled 30% this year through September. By the way, I got to send a shout out to my friend Lux over at Unicus Research. She has been doing a lot of work on CarMax and Carvana recently. Those are some of the names she's been worried about. I don't know if Lux went short CarMax or not, but if she did, she's cleaning up on that trade today. Shout out to Lux Ganapathy from Unicus Research. Follow them on Twitter. Comparable store used vehicle sales fell 6.3% in the quarter, CarMax said in a statement. Yikes. That's trailing the 0.7% increase projected by analysts. Earnings per share of 64 cents. Big miss on estimates of $1.03. A 25% tariff imposed on imported cars in April prompted consumers to accelerate purchases to avoid potential price hikes. Analysts had warned ahead of CarMax results that this pull-forward effect, one fewer Saturday in the quarter compared with last year, and market share losses to rival Carvana would weigh on CarMax same-store sales, and, well, they sure did. CarMax getting clobbered, now down 21.5% ahead of the open, $45 even for shares of CarMax. Congratulations, Locks. That was a good call. Meanwhile, Nvidia's investment in OpenAI will be in cash, and most will be used to lease Nvidia chips. All right, that's the deal right there. And that's the whole story, that one word in the title, lease. They're not buying the chips. It is a round-tripping scheme. Nvidia is giving the money to their customers so their money can give the money right back to them. Some of my critics on Twitter were saying, oh, they're not giving the money right back to Nvidia. Nope, you guys are wrong again. That is exactly what they're doing. But they're leasing the chips now. And I don't get it. These things are obsolete in a year. They have a useful life of 2, maybe 3 years if you're being generous, even though they're lying and claiming a 6-year straight line depreciation in most of their accounting. That, by the way, there's a tsunami of depreciation coming in the NASDAQ in the next few years, but I digress. How the heck do you lease something that's only going to work for 2 or 3 years? Maybe there's a way to do that. I guess you just have to lease it for like most of what it cost. But it just goes to show you guys the financing, the schemes are getting more and more complex. That is a sign that we are very near to a top. Meanwhile, China opens the digital yuan hub in Shanghai to boost global use. This one is for my BRICS guys out there. This is a feather in your cap this morning. China's central bank has opened a digital yuan operations center in Shanghai, featuring platforms for cross-border payments, blockchain technology, and digital assets, marketing another step in the country's push for global adoption of its currency. It looks like a central bank digital currency in China. Maybe we call it Kami coin. I don't know. Or means of production coin. Who knows? But the People's Bank of China's new digital yuan hub will oversee the development and operation of cross-border payment systems and blockchain infrastructure, while also promoting connectivity between domestic and international financial networks, according to state-run media. Meanwhile, the yuan has already overtaken the dollar in recent years for China's cross-border transactions, and the country's own payment system, CIPS, has been gaining traction. Now, I want to emphasize that is the yuan has overtaken the dollar for China's cross-border transactions, but that does show you China and their close friends are de-dollarizing. This thing is happening. The dollar is still by a huge margin the biggest currency, the world reserve currency. Most transactions happen, but China is doing an increasing amount of business in its own currency here. Earlier this year, the system expanded to cover more foreign banks, including United Overseas Banks. So China's pushing that digital yuan and that de-dollarization. And guys, we got a bunch of government data. We're going to go through this stuff quick, but we have to talk about it. The U.S. economy expanded at an annualized rate of 3.8% in the second quarter of 2025, much higher than the 3.3% in the second estimate, marking the strongest performance since the third quarter of 2023. The stronger than anticipated figure primarily reflected an upward revision to consumer spending. That's suspect, guys. It's highly suspect. All right. And maybe it's accurate. Maybe it's not. I've been theorizing, maybe buy now, pay later, maybe credit card debt, maybe pull forward. But 0.5% of GDP in revisions between estimates, that's freaking huge. That's hundreds of billions of dollars in previously undetected economic activity that coincides with 1 million jobs going away. Just doesn't pass the sniff test. But there it is. There's the number, 3.8% economic growth for the final revision, the final estimate of the second quarter. Also suspect, we got this one from Redbox Global on X. Shout out to Mish who found this one. Stephen Moran over at the Federal Reserve, that's Trump's new guy at the Fed, says, I expect shelter inflation to decrease in the next 6 to 12 months. Now, guys, earlier this week, I warned about this, that last week, the Bureau of Labor Statistics quietly announced that they were delaying one of their annual reports on consumer spending. And that annual report is used to determine the weights in the CPI math, right? How much shelter counts for this, how much cars count for this, food counts for this. And I suspected that the reason they were doing that was owner's equivalent rent, because there is a way to fake CPI lower while kind of telling the truth. Owner's equivalent rent, I've railed against that statistic for years on this channel. It is a flawed metric. It is right now artificially high. Asking rents are actually coming down in most markets in the US, yet we're still seeing big shelter inflation contributing to more than half of the gains in the consumer price index. And when I saw that report was getting delayed, I theorized that they are going to target owner's equivalent rent to try to get CPI down before the inflation from the tariffs hits. And now here's Stephen Moran, who was appointed right around the time E.J. Antoni took over at the BLS. And he's saying, I expect shelter inflation to decrease in the next 6 to 12 months. I really think they're going to go after owner's equivalent rent, guys. Now, that's not dishonest. Owner's equivalent rent is artificially high. But if you only fix that and you leave all the other things that make inflation artificially low, then you're still lying. And that's why I say, if you're going to fix CPI, fix the whole thing, not just the part you want that's going to make the numbers say what you want them to say. That is intellectually dishonest. But again, guys, they could do it. They could do it, and they wouldn't necessarily be wrong to do it, even though it is a lie. It's also the truth. Take this one. I'm sorry, this isn't the wrong one. I had something about rents. I lost it in here. But let's also talk about this. This is another flawed statistic. New home sales soar 20% in August to a 3-year high. Look, the show, we're getting kind of long here. I don't want to run an hour-long show here, but let me just say, given that rates hadn't fallen yet, it's curious that August sales jumped so high. Part of the answer may be in the survey itself. We were expecting a gain, but not that large, said Robert Dietz, chief economist at the National Association of Home Builders. All right, when the guy who builds houses is saying this number is flawed, that means this number is flawed. By the way, it's I think it's the Census Bureau that puts this data out. Always important to remember the margin of error for new home sales is large. We'll need to wait for revisions next month and the September data point to see if this is smoothed out. And then the article goes on to list a whole bunch of other people who are saying this number is highly sus. A lot of people on X were talking about this number yesterday, saying they didn't believe it. Again, government data. It's not getting better, guys. It's getting worse. We had initial jobless claims came out this morning, a big drop to 218,000. That's down from 232,000 last week. And of course, that big spike of 264,000 2 weeks ago, that big spike 2 weeks ago was caused by fraudulent unemployment claims in Texas. Again, guys, the data doesn't always say the right thing. This stuff is too important. Did initial claims really drop, or is this just another messing of the math? Well, we don't know. When you fake the stats 1 week, it's hard to trust the next week. Same thing with continuing claims, a modest drop to 1.93 million, down from a slightly higher 1.93 million last week. But last week, the continuing unemployment claims included a near zero number for the state of North Carolina, which typically reports about 15,000, 20,000 continuing claims. Obviously, all the unemployment people in North Carolina didn't suddenly find work. It was an error in the reporting. So is today's number an error in the reporting too? You see the problem here? Once you lose trust in the data, everybody's just got to make their own decisions based on their own flawed assumptions. These numbers are too important to let politics infect them, guys. I really hope that's not what they're doing. I really hope they're not doing it. I think the last guy did it, and I think this guy's doing it, unfortunately. I really hope I'm wrong. And as always, we're going to wrap up every show with a warning about alternative assets. And today it's Blackstone, Apollo, and others sell bonds backed by private credit at the fastest pace ever. The fastest pace ever. Oh, people must really want this, right? No, they don't, but they're selling it anyway. Bonds backed by private credit loans are now among the hottest financial products on Wall Street, with heavyweight firms like Blackstone, Apollo, and Golub selling them at the fastest pace on record. The securities known as collateralized loan obligations are taking up an even larger part of the $1.7 trillion private credit market. While most CLOs are backed by loans that banks give companies, known as broadly syndicated loans, private credit firms have muscled into the space, with the loans they gave smaller firms also being securitized and sold. And of course, you guys know who they're selling them to, right? Firms like Blackstone are increasingly building their private credit debt into CLOs, which offer some of the industry's higher returns to meet booming investor demand as spreads shrink across corporate bond markets. And again, spreads shrinking, guys, that should worry you. That means people are overpaying for too much risk. As a result, buyers of private credit CLOs are now getting less compensation than they have in the past to own risky securities that are more complex, relatively illiquid. They're not relatively illiquid. They are entirely illiquid. And they're also less transparent, read dishonest, than traditional CLOs. Hovering at about 20 to 25 basis points, the extra yield that private credit CLOs offer traditional CLOs is at historic lows, according to Bank of America. So far, about $30 billion of private credit CLOs have been sold in 2025, with issuance already outpacing last year's volume at the same time, and are on track to hit an all-time high of $50 billion by year end. That would beat last year's record by more than a quarter. Now, here's the thing, guys. 25 basis points, or a quarter of 1%. That is the additional interest you're getting for CLOs above basically the Fed's interest rate, what you get for taking on no risk. You're getting 0.25% in order to put your money into illiquid, non-transparent, dishonest dog shit. All right. Who in their right mind is overpaying this much for this crap? And you probably realize, hopefully you realize by now, the answer is you are. You are the one doing this. The reason why the market is overpaying for this is because the people making the decision are not using your money. Thanks to President Trump's executive order on alternative assets, they opened the floodgates of 401k money into this stuff. And of course, people are more than willing to invest somebody else's money while collecting a fee for the service, which means your 401k is being loaded up with this stuff. Guys, in particular, you people, if by some chance some person who doesn't typically follow their finances is watching right now, and you're in one of these target date retirement funds where you just passively dump 5% of your paycheck into your 401k and never look at it, and I'm telling you, they're filling your portfolio full of this garbage when you're not looking, and you're not going to realize it until it's too late. Be careful, guys. Open up those fund prospectuses. Know what you open. Wall Street needs to get this crap off their books before they accurately market, much like they did in 2008. And they are putting it in your 401ks. We say this every day. We're going to keep beating that drum because people need to know this stuff. And I just want to say thank you very much to my man. Nashville Pasta Man says $400 billion of hedonic adjustments. You just love those hedonic adjustments. Melon hedonic adjustments even. Yes, a hedonic adjustment, by the way, guys, that's what the BLS uses to say something as an improvement, and therefore a higher price is an inflation because you're getting a better thing. For example, a stove with a digital clock instead of an analog, hands going around in circles. That's a hedonic adjustment. That's an improvement to the stove. And if the stove is $500 more expensive now, that's not really inflation. That's just a hedonic adjustment lower for the inflation numbers. And they do that everywhere to make inflation look lower than it really is. And that's one of the reasons why I say what I think they're going to do with owner's equivalent rent. Even though that may be technically accurate, that truth is a lie because they're going to leave all that other crap, the hedonic adjustments and the ridiculous claim that health insurance is 30% cheaper than a year ago. Yeah, freaking right. They're going to leave all that. They're only going to fix owner's equivalent rent. And then poof, inflation drops below 2% target. Go ahead and print a bunch more money and cut interest rates. That's what it really looks like they're trying to do. Thank you very much, Pasta Man, for hedonically adjusting your support for the channel, sir. Appreciate that very much. Uncle Fedster also says, did you say you stopped recurring buys of Bitcoin, or are you just taking profits? No. Okay, so I didn't stop my recurring buys, and I'm not going to. I've got two different accounts. I've got my self-directed IRA that's in metals and Bitcoin, and then I've got my account where I just passively buy $100 of Bitcoin every week. One of those is on autopilot. It's just going to keep buying a little bit every week, no matter what. I've been doing that for years. I'm not going to stop. That is a hedge against me sucking at trading. And so I leave that there. Yes, I entertain the notion that I could be wrong about things, and I trade just in case. The other account where I have a lot of Bitcoin right now, it's my biggest position, and that was an accident. It just went up so much. In that account, I have started taking profits in Bitcoin. I started selling last week. I'm probably going to do that again very soon here. My goal is to be down to very little Bitcoin, not none, but very little within a couple of weeks, because I really do think crypto winter is right around the corner. I'm not going to sell it all. I am going to keep some, and I am going to keep nibbling as I do that. But it's time to take profits there, guys. We've had a big run here. It's been a really good couple of years, and I see the froth getting ridiculous. There's so many people out there doing these treasury companies and getting rewarded to the tune of billions of dollars for borrowing a few million to go buy some shitcoin. That is clearly not sustainable. That is clearly not good for anyone except them. And so I think we're kind of near that froth. We're near that point like we were with the Super Bowl in 2021, and we're near the point with Carlos from New York and B Connect, that whole thing, wassa, 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 wassa up. Remember that guy? When you see that kind of crazy shit happening, it's usually a sign that the top is near. So that's what I'm doing. And by the way, guys, I'm clearly not the best stock picker in the world or the best trader in the world. I don't claim to be. So when I tell you I'm selling my Bitcoin, don't go out there and try to mimic my trades. All right. I am one voice of many. So just take that with a grain of salt. All right. There's plenty of better traders than me out there. Anyways, and by the way, anybody who's really that good of a trader is somewhere out there trading other people's money, not selling a trading service for $25 a month so that you can mimic their trades. All right. If they were really that good, they'd be running money somewhere else. So just keep that in mind for all these people running their little algorithmic trading bots. There's so many scammers in that space. It makes me want to puke. Anyways, thank you very much, Uncle Fester, for supporting the channel. And once again, guys, I got to say, all you people who are out there commenting that Nobody Special had this story years ago on other channels that are finally talking about round tripping, thank you so much for doing that. It really does feel good to see that. I appreciate it. You guys are awesome. I had no idea how many of you guys were out there because, I mean, it's a lot of names that I don't even recognize. Not, some of you guys, I recognize your names in the chat that are out there doing this stuff. Some of you are people who have just kind of like been quietly watching for years. I don't recognize the handle, but you're there saying, hey, Nobody Special had this story years ago. I really appreciate that, guys. That made me feel good to see that yesterday. So thank you for doing that. And hey, while we're at it, how about that like button and that subscribe button? All that algorithmic hedonic adjustment stuff. Let's get some of that going also. Also, thank you guys for the super chats. Thank you to my Patreon supporters and magnanimous Millen hits on YouTube. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small, dream big.